See this? Awesome. So this is my pitch, right, for Tesla. And you can stop me anytime if you want to for me to clarify. I would say this is a mini bull case for Tesla because you can hear some crazy ones out there, like 10,000, in 5 years. I'm not in that camp, but I can kind of understand why they would come, like they would, they have these projections. But anyway, so this is from Monroe Live, the channel. They tear down cars, so they're gonna tear down the Model S Plaid. And if you have time, you can check it out. Some of the information I got from there. But as soon as finally they had this, license plate, this is what the end of gasoline looks like. All right. So why, my investing mindset is that, if you look at the mission of Tesla, it's about transitioning the world to sustainable energy. And I think this is similar to what Buffett is saying, that, he invested, with a large tailwind from the American economic growth. And if we were to look at what's the tailwind right now, and I would say it's an energy transition, and that's going to spill over to transportation as well as other areas. When I was a kid, right, before we know about this climate change, the talk was, well, we're going to run out of oil. Of course, they found other ways to extract oil, but the end result is we're going to run out of it anyway, right? So whether people believe in climate change or not, it is kind of a crazy experiment that I don't think it's worth taking. I think that Elon has said probably similar things. So yeah, you can still invest in oil, but it's probably going to be short to midterm, and it's going against the wind. So I'd rather not to do that. And the key to that transition is going to be batteries, where Tesla's really good at. Okay, so if you take a look at, so this is from ARK Invest, electric vehicle growth. 2019 is a bit of an anomaly, but this is not dropping, right? Just that the growth is not it didn't pick up as much in 2019. But if you look at 2021, it's growing at 100% a year. And there's different ways to count this. There's some like kind of this partially electric, right? Plug-in EVs, hybrids. Sometimes these get called EVs as well. But we're mostly interested in battery electric vehicles, which is purely EV, right? So if this trend is going to continue, in not too distant future, EVs will take over ICE cars as the most cars sold on the road. Now, if you look at oil, transportation, right, accounts for 70% of oil consumption. So that means as we transition to EVs in the not too distant future, the demand for oil is likely to go down, right? I don't know. Other people will say, well, you can use it for heating, you can replace coal. I agree, right? But it's 70% that's being replaced. And this is a bit of math I did about 2 years ago, looking at the Tesla Model 3 standard range, the price being sold in Canada. And I was trying to come out to, when is it worth it to buy the Model 3 compared to a Toyota Corolla, right? Knowing that you're going to likely to save on fuel. Insurance is actually pretty similar. I think Tesla was actually cheaper for a more expensive vehicle, which took me by surprise. But I did obtain quotes to substantiate that. And the depreciation very low for Teslas, right? And so it's for the cost of ownership for 5 years actually come to break even, right? If you just drive more, you drive more, but breaks even at 13,000 kilometers per year, right? And that was when oil was $1 per liter. Now it's 150 at London, but the cost of Tesla has also gone up. So even if you call it a wash, that's a pretty good value proposition, right? And for EVs, no refueling. Go to Costco, I'm waiting like 10 minutes just to fuel up. Super long lineups, fewer repairs, better performance, right? Better 0 to 60, less noise. You have a baby, Nate, right? Maybe you like muscle cars before, you probably don't like them now, right? They drive by, you're just cursing. It's like, like, why do you have to do that in a residential zone? Well, with EVs, you no longer have that. The range is still less than the full tank of gas, but it's improving, right? It's 350 kilometers on the full charge. And I think that's pretty good. Better climate impact, less depreciation. And then you're facing with, government banning, all over the world, banning ICE cars in 10 to 15 years. So again, I don't like to swim against the current. So it's a better car in every aspect. So let's look at what Tesla's advantages over other kind of manufacturers. Right? You have the people say competition, but just last year, all 4 Tesla models ranked top 4 in the highway safety ratings. The Model 3 and X are 1 and 3 in consumer satisfaction survey in 2021. The 3 and the Y are 2 and 3 in all car EVs sold in China, right? Beaten by a $5,000 no airbag, very, very cheapo car. So that doesn't really count. So they're the best-selling car in China as well. It outsold the ID.3 in Germany in 2021. And it's just from imports from China, right? They don't even have a factory in there. It still outsold the ID.3. So, and it's the best-selling luxury car. It's not even like EV. It's the best-selling luxury car in California. So it is taking over, and the competition is still lagging behind. And if this is from James Stevenson's graph. You can look at the cars sold by Tesla per year. This is nonlinear growth, right? This is exponential growth. And management is guiding 1.4 million cars next year. Okay, so what about the financials? If you just look at the EBITDA and operating income growth, you can see that a lot of these, up to 2017, it's all like a lot of research and development expense, right? So these are investment for the future, and it's now paying off. We're talking about triple-digit growth in these factors sometimes. So, and that's like to continue in the near future as well. So and I'll ask, okay, so why does Tesla have this advantage? Well, first of all, I mentioned the tailwind. Okay, don't need to repeat that. But if you just go back to Elon Musk's vision when he published that in 2003, and when he co-founded Tesla, the idea was to make a desirable kind of sports car, right? And to kind of fund the production of a luxury car like the Model X and X, and then use the money from that to fund the even more down market but still a premium car like the Model Y and the Model 3, and then use that to make it even more affordable car. So that is master plan. It's starting to come to fruition. Now he's off by a few years. Some people say Elon doesn't stick to his promises, but he eventually delivers, right? And if you look at, so why is he able to lead, like this a company this way? You can see, well, people are still attracted by that, by that vision. They're number 1 choice for engineering graduates in the US. I think number 2 in 2021 behind SpaceX, right? So the same thing. I'll just show you one thing. So this in the bottom right is what's called the gigacast, right? Diecast. So they were able to use one machine, and you can see in the top right. So that's the scale of a machine. That's it's more than a couple stories tall. So that's a die-cast machine, right? So you inject molten aluminum in there, and it forms one part of the car that's highlighted in orange here. So that used to be 370 parts, right, by traditional manufacturers. Tesla has made it into 1 part. Okay, think about how much less labor, machining, time costs, right? This is why they were able to, produce so many cars in so little time. And the Chinese competitions are rushing to copy. Okay, so when you're doing something good when the Chinese are trying to copy you. Right, so automation, computerization. There's a digital twin for every car produced, so they know exactly what went into this, because like different things go into Tesla cars all the time. Even though it's the same year, same model, they make a lot of iterations. Sandy Monroe counted like 14 changes in 3 months for one crucial part. That's just how fast they change. And that's just unheard of in traditional automotive. And this is all translating to like really good gross margins, right? So for cars, automotive, they're best in class. Toyota is at 20%, Tesla is at 30%, BMW is at 18%. If you look at asset turnover, Tesla is at 95% turnover, Toyota is at 49%, and so is BMW. Right, so all of these are leading.
Sorry to interrupt.
Sure.
Can you explain how you calculated the asset turnover?
Oh, asset turnover would just be sales divided by book assets.
Okay.
Yeah, this is from Ticker Terminal. I didn't calculate it themselves, but usually it's sales divided by the average of the last year's and this year's assets.
Okay.
Yeah, so that's like a traditional efficiency measure.
Okay.
Yeah. Okay, so let's look at if the management's smoking weed or not, right? And then we know Elon isn't smoking weed. So Tesla sold close to 1 million in 2021, and they're guiding 50% compound yearly growth. So that means by the end of 2025, we're looking at 4.7 million cars. Okay, so I look at for both from supply and demand side. From supply, we know that they basically give us the numbers like 1.4 million from Fremont and Shanghai factory in 2022 without any kind of like expansions, right? This is just from process improvements. So that leaves about 3.3 million to make up by other factories. So we know there are two huge factories coming online, Giga Berlin and Giga Texas. Both are, each of them is bigger than Fremont and Shanghai combined in terms of footprint. Okay, so considering future efficiency gains, if you just take 1.4 times 3, it's 4.2 efficiency gains, another 500,000. That's I think reasonable, but they are going to build more factories starting in 2023. So they should be fully operational by 2025. So I'm not worried that Tesla should be able to supply 4.7 million cars. What about demand? Well, okay, so if you go back to 2019, it's 65 million cars sold, okay? And I assume that's the peak because ICE cars have been falling, but total demand for cars may rise. So 4.8 BEV sold. A lot of these are really cheap cars. I don't really, so that's probably high. It should be a dollar sign on there either. But we're counting about 100% growth year on year, right? So that means by end of 2025, right? This may seem wild, but considering electric cars are better on every dimension, I don't think it's that out of the picture. So about 29 million battery electric cars by 2025. So Tesla just need to capture 16% of that market. Currently, they're at 14%, but that's because they sold every car they were able to make, and demand it just through the roof. And if they could made more, they would sold more, right? So that part, Tesla need to work on it just to maintain that that market share. That one I will admit, right? So that's a challenge for them, but I think they can be overcome. And people will just upgrade for efficiency purposes alone, right? Hertz just overhaul their entire fleet. They just buy 100,000 Tesla Model 3s for their fleet. There's no reason to think other competitors won't do the same, right? Businesses are swayed by money, and maybe consumers by brand, but business just care about the operational costs. Okay, so why would consumers continue to want Tesla cars? Well, they just do it better than other people. For example, the over-the-air updates. I don't think any other company is able to do as well as the Tesla right now. So it's basically an iPhone on wheels, right? It's the best software and hardware integration. And people make fun, oh, it's just an iPhone on wheels. I found that's a great value proposition, right? So fast, so simple. You don't have to worry about all this little different components not talking to one another. It's very well integrated. They're the best class battery technology, right? And that's just not me saying it. Both Ford and VW CEOs have came out and admitted, right, that Tesla makes each battery go further, right? And they have the best thermal management system. That's part of why the batteries are so good, is that the Mach-E that came after the Model Y uses 3 times as much hoses, right, in terms of length, coolant, and parts to cool their batteries. So that leads to more cost, obviously, and more weight because they have to carry all the coolant and lug it around. And just, it's just not well designed, as well designed as the Teslas. Okay, obviously strong brand recognition. You talk to kids, they know about Elon Musk and Tesla. This is future demand. And there's currently, I checked, right, for the US website, there's an 8 months delay on Model Ys. If you want to order it, January, good luck getting it in August. So the demand is there. Okay, so here's something I don't think a lot of people talk about, but when I saw through it, I think it just made sense. It's about this, they can catch up later, gotta take care of the baby, obviously. So it's about this synergies between their various parts of their model, right? So it's the car sales that leads to a big fleet, and the big fleet will lead to additional service revenues, from Tesla insurance and autonomous driving, so the FSD. Basically, as the fleet gets bigger, the insurance and FSD become more lucrative, right? Because these are high leverage, high operating leverage businesses. It's basically the iPhone model, right? They sell more iPhones. They get to charge more, through their app store, iOS, hook people in. And here is just, that's something that, you have to see the trend to believe, but FSD will reduce accidents, right? Up to 100% safer than human drivers, which will be rewarded with lower insurance premiums that only Teslas can provide, which will lead to more FSD adoption, right? So people want Tesla cars, insurance, and FSD. That leads to this this virtuous cycle that the demand in one drives the demand in others. And why do I say insurance and FSD synergies? Think about this, right? Insurance is the business model is about pooling good and bad drivers, right? Because insurance companies don't really know who are the good drivers and who are the bad drivers. They have very rough proxies, right? They're saying if you're young, you're a male, while you're a new driver, we'll charge you a high premium, right? We know that to be true. But really, they're trying to separate, okay, who are the good drivers and the bad drivers, and charge them separately. But they really can't. Now, each of us, we know we're a good driver, a bad driver, or not, right? But we're not going to tell the insurance company, because if you're a bad driver, you're actually getting off easy, even though other demographic characteristics may lead you to pay more, but probably not as much as that your bad driving dictates. But Tesla, because of all their sensors and cameras, know exactly how you're operating the car. So they know your risk profile. So they're able to offer you exactly what you should be paying. So which will lead to a separating equilibrium, right? This is what they say in economics, separating equilibrium. The good drivers will flock to Tesla because they know they'll pay less, and other insurers will be left with more bad drivers. Then what they're going to do to keep out their profit? Well, they have to raise prices, which will further push more good drivers out, right? So this is just like a vicious cycle for them, and Tesla is going to win because they have what other insurers don't. They know who are the good drivers and who are the bad drivers. Okay, and further, they'll use insurance premium deductions to encourage people to take FSD because FSD is safer. So that'll definitely get to people who are, who may be really old and have trouble operating the car, new drivers, right, timid drivers. They'll say, well, your insurance premium will go down if you buy FSD. And then people use FSD, learn to like the product, and then will buy more Teslas. So again, this is why I think Tesla insurance just underappreciated.
Can I jump in there for a second
Sure.
before you go to the next slide? I think that also what Tesla, I'm a big believer that data is the future, right? And how we use data is going to be very important in the future in real decision making. And the amount of data that Tesla collects off of these cars, I think that would take the insurance fraud out of a lot of their accidents and stuff like that. With regular cars, not everybody has a dash cam. Some people have a dash cam, some people don't. But with the data from the accidents, I think there's going to be a lot of non-payouts for people trying to fraud or say this happened or that happened. And I think it could definitely increase the margins on insurance.
Yeah. So what do we rely on, right? Exactly what you're saying. To rely on the driver's descriptions of what happened. Well, Tesla knows, right? All the cameras records. So it takes circumstantial evidence, right? What exactly was happening around the time when the driver decided to maybe speed up to escape an accident or hit something, but it could be avoiding something like that much worse, right? So they can actually calculate it as well. Even though this guy got into the accident, he's still a safe driver, right? They know this because they can actually look at what was happening just before the accident happened, and that's something that insurance companies have no idea how to get.
And also, I'd like to add, so I can't remember which book it was, but they were talking about Warren Buffett's use of leverage, and I said to myself,
premiums,
I said to myself, and I looked into it. They're saying that he was essentially able to borrow money from Geico's float and then pay it back at pretty much a negative interest rate because you got to pay back just the amount of claims, and the less claims, the less you have to pay back, right?
Yeah.
I think that source funding could be a similar growth driver with that additional money to reinvest into other aspects of the business,
for sure,
and help just go in all these different directions.
Yeah, and that benefit becomes bigger as the insurance business gets bigger. Okay, so FSD, right? It's just like, well, people have to believe FSD. Otherwise, again, the valuation wouldn't make sense. So this is my best attempt, right? If you just look at the picture on the right, so you have Intel Mobileye on the top right, and the Google Waymo on top left. Now you can see of all these new gadgets that's added to the car. That's LiDAR technology. So that's both more expensive, right? That's more expensive than the cameras that Teslas use. And also you have to be, like people say, well, it drives pretty well on its own. Yes, but in geofenced areas, that means that Waymo needs to kind of like define an area which the taxi can go and have everything mapped out. There's a tree, there's a building, right? And what if those things change, right? What if a rezoning happens, the trees, the park gets, renovated, the building gets knocked down, they have to update the map, right? So this is, doing things this way has ongoing costs, not to mention initial hardware costs of LiDAR. What Tesla is trying to do is, which isn't just make the computer think like a human does, react to those elements, learn to understand what those things mean, and then you don't have to do future map updates, right? You just have to rely on Google Map or Apple Map or something like that. And people say, like, well, but GM Cruise and Ford Blue Cruise are highly rated. You're gonna have to look at those ratings. It's just so funny because these are assist systems, right? Level 2. They're not even playing the same game that Teslas have. People did the test of the Ford's Blue Cruise system. You cannot even stay in a lane in a highway when there's the curves gets a little bit sharp. Okay, Teslas can go on the ramp, go off the ramp, drive 100 kilometers on the highway, no intervention. All the interventions seem to be coming from the city driving, which really complex, complex environments, because the beta testers take them there and to collect this more crucial data, which is like really weird occurrences, right? Windy roads in San Francisco, snow falling off a truck, weird traffic cones. All of these are the actual value add in the database, right? Normal driving data, if you have 1,000,000 miles of those, safe in environments means nothing. We want safety, right? So if you want the car drive yourself, you have to be like, well, in case something, shit happens, Tesla should be able to react to it. So it's these edge cases that are valuable, and Tesla has order of magnitude. I could even say thousands or tens of thousands, even 1,000,000 times more than Waymo.
So before you go ahead, to play the bear for a second, like does the average person, the average consumer even need that, right? Like how often does the average person use their car? Most people just like drive to and from work. So like I can see that, a pre-programmed map, I might not need more than that if I just go to and from work, to the grocery store, like run small errands. Like most people don't use their car that much.
Yeah, it's I think that's a great point. That just means who's gonna come on market sooner, right? Because still think it's a winner take all market, right? So if Tesla's FSD ability is gonna be just as good as Google's, why wouldn't you take the extra capability going on an adventure, right? Still using FSD. But I agree with you.
It would all come down to the price difference, because like there's go ahead, Nate.
Oh, I was just gonna say I've got like 100 bear points I want to make here. Yeah, almost all of them are just in comparison to what you just said, Ken. But I'll just wait till you're finished the whole thing.
Sure, well, I'm pretty much done after this because I just come to the model, right? So again, yeah. So how much are they willing to pay? And there's a slide on robotaxi, but I think we'll do it after. But this is just basically saying, Tesla's ahead with this FSD. Now, the question is obviously how much are people willing to pay for it? Personally, I think offers a great benefit for people who can't drive anymore, right? Or just intimidated by driving, as these people are going to be the early adopters. Okay, so coming back to this model, which I shared before, basically I'm taking Tesla Q4 2021 numbers, annualize that, assume a 50% growth until 2025, and then use the current profit margin, just assume it, okay, yeah, so that's going to be 92 billion by the end of 2025. And then you have I normalized some of the operating expenses, took out the non-recurring items, and assume a 10% growth on the operating expenses, and then a 28% gross auto margin shows up. Then you have to look at the insurance and FSD, which I just took Progressive's numbers at 20% of their net income. Probably be higher for Tesla, I think, but just be conservative. Currently they're charging 50, 45, 48 per year, right? In terms of insurance premium. So just did 20%. Which gives you 5.6, which doesn't seem like a lot, but as the fleet gets bigger, this is going to become bigger. And then you have FSD. Currently, it's 20% per month. Again, I understand that number could be in dispute, but assume a 90% margin, that should give you about 13.3 billion per year. That's only a 50% take rate of the entire fleet. So then, if we're gonna use some multiples by year 5. Using Apple's multiple today, which is 23 times EBIT, that gives you about $25,000. If it's today's price is about 1,000, it would be a 20% internal rate of return, but today's price is around 850. So we're looking at a margin of safety about 15 to 20%. So that's all I'm want to do at the front end. Have some slides on robotaxi, we can discuss that. Those are obviously more speculative, and the numbers are less sure. All right, Nate, go ahead.
I want to ask some follow-up questions here before I begin giving my bear case, because I just want to understand your chart here.
Yeah.
So this is based off a 50% increase in profit per year, correct?
Yes.
Okay. And did you manually
increase in revenue? The profit is
forced
out because I have to assume a different kind of growth for operating expenses.
But did you manually calculate the revenue based off of their sales, or is this just based off the total revenue reported?
Oh, are you thinking some type of breakdown by model?
Yeah. So when I did mine, I broke it down by model and by cars, by insurance, by energy. And the reason I bring this up, and I think it's important, is because the revenues I came to from their long-term revenue sources of things they're selling, basically, were way
These are just
lower.
automotive. I didn't include sales from any other businesses.
Okay, so this is just automotive sales.
Yes. Yeah, everything else I assume you get for free.
Okay. Okay, fair.
Yeah. Because I don't really forecast the sales of insurance, because the insurance is going to grow in lockstep, right? Probably even more as time goes along with automotive sales. So automotive sales is the iPhone that drive the growth, and then the service revenue is going to become a bigger part of the revenue. Once the automotive sales stop growing so fast, right?
Yeah.
Because you're going to say, well, are they going to sell 30 million cars a year? Probably not. Yeah.
No. Okay, cool. So I just I wanted to look at that first, because part of my biggest opening bear argument is going to be when I looked at their profits versus their reported profits. Like the majority of the profits for 2021, excluding Q4, because I haven't looked at Q4 yet, to be honest. The majority of the profits actually weren't coming from long-term profit margins. They weren't coming from car sales. They weren't coming from insurance. They weren't coming from sales of batteries. They weren't coming from the charging stations. They were coming from other things. Presumably, I'm guessing carbon credit sales.
Carbon credit.
I know.
314 million.
A Bitcoin. Sorry.
314 million in carbon credits in Q4 2021. So I took that out. It's not even in the model.
So I also 2021 he made a big Bitcoin investment.
There's no Bitcoin sales.
Pardon me?
Yeah, they sold a little, I think, in Q1 or Q2, but it's not in Q4. So I didn't even count that.
No. Okay, and I'm not even talking about Q4 because I haven't looked at it. So I'm just saying in general. It concerns me that so much of their profits are coming from non-long-term sources. So like when someone looks at that valuation of like right now, it's all the way down to like 130, I believe.
Yeah,
127. Yeah, but it came a long way down. But that valuation,
comfortable that I'm not investing in something with a PE of 1,000. That's my buy signal.
Yeah, exactly. So, but I think my point here is that the PE is much larger than people realize, and I think one of the biggest reasons why people are resisting investing in Tesla is because they see that massive PE. And I think you have to understand that that PE is actually larger than it is. Another thing I wanted to point out was that just that the growth last year. So 2021, we had massive growth. And like, let's just get this off the table. Like qualitatively, Tesla's a great company. I'm not arguing against that. Like obviously they're making great vehicles. I see lots of growth just in the sense of like, I didn't used to see Tesla cars on the road and now I see them everywhere. You know, to me, that alone is awesome for them. And realistically, it's just, do they have the growth that's going to match the valuation? You know, because I would argue that there's some red flags that maybe they don't. You know, we had this amazing growth this last year in Tesla, but I wonder how much that is sustainable because, you know, last year we only had 24% growth. The year before that, we only had 14. And now, as you pointed out, Elon Musk is predicting 50% growth for next year.
Yeah.
But
Well,
Elon Musk,
2021,
well,
they had like 60% growth, I think. So like on revenue
60%?
dollars. So and 20, I could pull this up and I let Tom jump in, but I'll pull up ticker terminal just to see if we're talking.
I just looked at the revenue chart.
Yeah.
So Nate, here's my argument to that. And the problem with looking at historical figures on certain high growth companies is you have to take into consideration the production capacity.
Yeah, I totally,
if you're looking,
I totally
at
concede that the growth is going to go up faster over time.
Yeah.
But my point is more of it. How do we know for sure that this year wasn't a one-off? When it's been a one-year trend.
We never know anything for sure, right? Yeah,
and that's. I'm not trying to convince people not to buy Tesla. I'm just trying to convince people that there are some possible red flags here.
Yeah. So I just want to confirm, right? Nate's right. In 2019, the revenue growth is 14%. And in 2020, that's 28%. 2021, that's 70%. Now, let me just give you the reason for it. And people have to decide for themselves whether that's
Shanghai.
Yeah, exactly. Because they just opened the Shanghai factory in 2020, and then it was locked down for a couple of months because of COVID, right? And then they have the shortages. So even during the shortage, so they continue to ramp up the factory. And so that's why you see a huge jump in 2021. That's because of Shanghai. And then Fremont made some gains as well. Also, Fremont was also shut down by the California government for like close to 2 months, right? Like in 2020. So, 2020 is an anomaly. And we would definitely have to agree on that.
Sure.
Now, for 2022, they have 2 new factories come in. So you just look at supply, it's like, well, okay, so if Tesla's back ordered for 8 months, demand is not an issue. It's all about supply. So can they do the supply? Well, it depends on how
they're
much.
They're not the only company that has much larger demand than supply right now. And part of that demand is going to be coming from the fact that other car companies have a low supply due to chip shortages. So I don't know if that in itself is actually that predictive of the supply. Or
so
the
you're saying
fact that we have higher
because they can't buy some other ICE cars, because Tesla is available, it disproportionately kind of benefited Tesla because everyone has supply shortages.
Yeah, but okay. Is that going to benefit them the same amount over the long term? Is part of my point here. So another thing I want to talk about is just Elon Musk's guidance. Like you pointed out, he's calling for 50% growth. Yeah. But Elon Musk, I think, sort of infamously always sets really high guidance, and almost always they miss that guidance. So I don't know if it's valuable to look to Elon Musk's guidance as being predictive, because obviously he's not gotten it right in the past, and I think he has a strong desire to upsell the stock because he wants to increase his own returns on that stock value. So he's obviously got a bias there, and he seems to execute on that bias. You talked about like that 30% profit margin in comparison to other ICE cars. Specifically, you brought up Toyota. But again, I'm assuming that you're looking at the profit margin for the entire company, not just auto sales.
Yes, I didn't go down.
Yeah,
to auto sales.
So I don't think the profit margin is anywhere near that high if we look at just auto sales. I think it was 7%.
So it's even lower.
Pardon me?
So it's even lower compared to Tesla, because I'm looking at Tesla's auto sales margins.
Oh yeah. Tesla, like all car companies have terrible margins. Like that's why a lot of people say don't invest in car companies in general.
Right.
I think I'm not trying to say that Tesla doesn't have better margins. I'm just saying their profit margins on their car sales is nowhere near 30%.
Yeah, I think that is accurate, and I think that is one of the main reasons why originally a lot of the bears got it wrong, was because you're comparing a business that has like the other auto sales, I think, what did you say? BMW are in like the
I had
low
Toyota and
10s.
BMW. Yeah.
We're like what,
10-15%
10-15% margins?
Toyota
Like,
had 20, which is kind of surprising, but that's as Nate pointed out, that's for the entire enterprise. I'm not sure where else they're getting that that margin, if not from auto, because I'm not aware that Toyota really sells.
They'll also have a lot of for parts and for repairs, right? A lot of people take their cars to the dealerships to get repaired.
Well, dealerships are separate businesses.
The dealerships are franchisees.
Yeah. The
that's
profits
fair.
do not flow to.
What about the parts though? Could that be part of where they're getting the profits from?
It could be, but Toyota mostly gets their parts from tier 1, tier 2 suppliers. So I'm not sure if the dealership purchased directly from Toyota or just basically a tier 1 supplier put a Toyota logo on it and just sell directly to the dealers. Yeah.
Okay. So like another thing I'm just thinking about here is the fact that whenever people look up like Tesla, whenever people criticize Tesla, they always criticize it from the margin of, well, it's a car company and it's worth more money than all the other car companies combined, essentially.
Yeah.
But it only has 1% of total sales. And then the counterpoint always gets brought up. Well, they're going to be selling insurance. They're going to be selling batteries. They're going to be selling charging stations and charging fees on charging stations. And yet, if we look at their current profits on all of those, the revenue streams on them are all so low that they're not really a viable business at this point. Now, maybe they will be in the future, and that's totally possible. But I think at this point, they're buying Tesla on that as a model. That's an unproven.
They're not the only company that has a loss leader strategy on some part of their businesses, right? So you can just see that the charging station as a strategic move to gain some first mover advantage. I mean, why would you build a charging station near another Tesla station? Because the Tesla already opened up the charging to the other OEMs. It just because once you put that stake in the ground, once you made an investment, that's going to decrease the potential return of investment made by other manufacturers. So Tesla wasn't trying to make money on the chargers. They're trying to make money on the auto, which they are. And they're using the cash to kind of to get even better products. These are just sweeteners to get people to buy the cars, so they don't have to make margin on charging on the supercharger.
I only bring that up because people are saying that that's going to be a huge part of the business. In the
future. But that was
I'm only trying to point
ago.
out that it's not a proven model yet. That it might be. I'm not saying it's a bad idea.
Just look at the cash.
I'm saying you can't account that in right now into the valuation for sure.
Which I'm not, right? And it's not.
I'm not saying you are. I'm not responding to you specifically at that point.
Yeah,
I'm responding to other people.
Yeah, so let me just share again. This is a ticker terminal, so I don't want to make money on.
Can I share my screen for a second? Can I share my screen for a second? I have the Q4 2021 update.
Go ahead. Open. Yeah, so let me enable that. Yeah, the Q4 2021 is not updated on ticker terminal, but yeah, it's obviously available from investor relations.
Can you see?
Yes.
Okay, so we're looking breakdown of revenue, right? Is what you wanted to look at, Nate?
Yeah.
So we have automotive revenues, 4,000, which is automotive credits. So we've got, this is in millions, right? So that's 9 billion just in automotive revenues. Total revenues, they've got, I know there's going to be a breakdown.
You're looking at 17.
Pardon?
You're looking at 17. You have to go to the right for the 2021.
Oh, yeah.
No, you can't. This is why what I did.
Oh, here's the deliveries.
Okay.
Solar deployed, store and service. So this is a more accurate breakdown of where all of the revenues are coming from. So we had 13 billion in automotive.
No, these are production, right? So these are cars.
Oh yeah. Sorry.
Cars sold. Yeah. Yeah. So these are not in dollars.
Yeah. Okay, so we have total storage energy deployment. Like this is growing at a rate of 32%.
Yeah, that by the way is sold out. Megapacks are sold out for 2022.
And I think like a lot of the products that they have, solar, you know, yes, they're unproven models, but like so was Tesla, right? And I think that's a big part of the allure is all of these unproven models that if they do, if it all comes down to, do you think Elon Musk can execute over time?
Yeah, I agree with that. But I guess what I really want to get across, and this, like my whole strategy as an investor is to lower my potential downside and risk in part. So my real point is that there is a very large potential downside if that doesn't get realized.
So
Not
what do you
that
think will be the
there isn't a
catalyst for
potential
that downside?
upside. I agree that there's a large potential upside.
Yeah.
My point is that there's also a large potential downside.
Oh, I definitely agree that there is risk involved in investing in Tesla because a lot of it's unproven.
Yeah, and I totally agree with, you know, that mentality. All I have to do as investors is basically look at the upsides and downsides and decide, you know, which one has a higher probability of being realized, right? And nothing's for certain, right? If there's anything for certain, obviously everyone make money hand over fist, or don't because the price get bid up. You know,
I really like a Warren Buffett quote on this. He says, if you take care of the downside, the upside takes care of itself.
Yeah, so
I think that could be
we just have to look at what
I'm not
exactly
arguing that everybody just buy like the dividend stocks and make an 8% return per year.
Yeah.
But
oh yeah, if you guarantee myself 8% per year, I drop on my Tesla. You know, you guarantee me 8% for 30 years, done.
I don't think 8% is a hard return to make.
No.
You look at like
you can guarantee it.
ETFs, they average like a 5% year.
I know, but you know, it's up and downs, up and downs. Who knows when I retire, the money's going to be exactly there, right? So there's always risk, but I'm just saying, you know, nothing is for sure. But let's just get back to the key point, which is, you know, understand the downside and what exactly could happen to introduce that downside, and then we have to determine what's the probability. Now each of us will have our own subjective, but we have to identify that event, right? What is the thing that scares you about Tesla? You think that would
okay? So I want to get to my number one argument against, actually, which I've been kind of building to, and that's you said this line. It's a winner take all environment, and that's I think the thing I disagree with you the most on. People have such brand loyalty when it comes to cars. Like I have friends and family members who like they walk around in their Chevy shirt and they swear they will never buy any car that's not a Chevy. You have the same people who exist for Ford. There's people who like, I'm only buying Ford F-150s. I'm invested in Ford, full disclosure, but like Ford does not make good vehicles for the most part. And yet they have the number one selling pickup like almost every year for like 40 years straight. It's not about the making of the quality. It's about the brand recognition and it's about brand loyalty. And like, yeah, Tesla has great brand recognition right now, but can they capture as much of the market as is required? So like we did like a breakdown of how much the revenue needs to grow over 5 years to get to some of these valuations. And the total the valuations are crazy. Like we're talking about them capturing 25% of the market. And maybe they would, but there's so many car companies out there. And like most of what they've done when they had a monopoly, a functional monopoly on electric vehicles. That functional monopoly is like next year's dead. There's so many.
I disagree. I disagree on the functional. I think that the legacy car makers have so many headwinds in terms of catching up to Tesla. Like to say that like the Tesla's monopoly is going to be over next year or the year after. I disagree on that. I think that, you know, the automakers don't have what it takes to compete with Tesla.
I actually disagree. So like looking at Ford, like they're investing like $30 billion or more actually in electric vehicles. Their electric vehicle sales went up like 128% or something last year. That's off the top of my head, but like GM's also, I think last time I checked, they're investing more than $20 billion into electric vehicles.
They didn't sell any though. They stopped selling the boat because they keep catching on fire.
Sorry, I can't hear you.
The biggest thing is
sorry, I said, but they didn't sell any in last half year though. I think the boat keep catching on fire, so they stopped selling them. And then new models they haven't started selling yet. So GM is still unknown. Now Ford, I'll give you, they'll probably survive. But I just want to highlight one thing. It's their pension liability. Let's just see, right? So how much pension do they have? They have 2020. I don't know why they
on Ford.
Yeah,
So there's a misconception about Ford debt I want to point out, because everyone thinks Ford has a ton of debt, and it's actually part of their business model that people don't realize. They have long-term debt and short-term debt. So if you actually look at like their short-term debt, which is like because they lease directly cars to people, so that gets counted in their debt to equity ratio and their total debt amount. So when you buy a car from Ford, most people, they buy it on credit through the company, and that counts as part of their debt. But that's actually debt that's essentially all guaranteed future profits for the most part, right? If you look at the debt they actually have in terms of like infrastructure that they've borrowed money to pay for, their debt's actually quite reasonable. In fact, I think, I haven't checked recently, but last time I checked, they had as much cash on hand as they had long-term debt.
Yeah, I agree with you on
like
that.
Ford really doesn't actually have a debt problem.
Financing debt is actually 130 billion, which I agree with you. It's not something that they need to worry about because it's really, the service, they're acting as a bank. I'm just saying that Ford has some legacy costs like the pension that actually, I don't know why I take a terminal not showing something for 2020, but all of these are kind of these gold-plated pensions they have to pay for the workers already retired, right? And then Tesla doesn't have that baggage. That's just one thing we have.
Yeah, but like at the same time, Ford is so much cheaper, right? And as like I feel like as a value investor,
but I think Ford has. So I think Ford and a lot of the legacy automakers, their biggest issue is going to be they have to completely self-destruct their entire business and rebuild it from the ground up, because their manufacturing processes, like when you manufacture ICE vehicles, most of the manufacturing process is building the engine, right? So the way they have their lineups and their entire like I can't remember what the lines are called, like the
assembly lines.
Assembly line.
Yeah. Their assembly lines and the way they're structured to build the electric vehicles, they're going to have to completely revamp their manufacturing process and start over, right? And Tesla has that advantage, and that's why they had such horrible, so risky before. But a lot of those manufacturing best practices are going to be ironed out in Shanghai, and now the new factories are going to be a lot more efficient. And
I actually think the fact that those factories in China is a risk factor. We have a lot of instability when it comes to China. In terms of investing, like I thought about investing in China. I think actually in the long run, China's a better economy than the United States.
I agree.
They're growing a lot faster. China or United States, if you look at it, their economy is actually shrinking when you look at real dollars. When you compare the GDP growth to inflation, the U.S. economy is shrinking, and probably at like around 4% or more a year, which is pretty crazy. But when we have potential war with Taiwan, when we have the United States threatening to take them off of the SWIFT banking system, when we have them just taking profits away from companies, like who is to say that China won't just be like, what? Is it NIO? What's the Chinese electric company?
Well, there are three.
Who's to say they won't just mandate NIO as the new?
Yeah, so all those we just have to, if you want to, these are risk factors and you want to assign a probability too, just to, all I can do is look at the fundamentals and just a near term. So what happens, like there's the power outage in China earlier actually it was 2021. Shanghai wasn't affected, although Elon Musk did say that was like a huge concern, obviously. A potential war, wars will have wide-ranging effects, and we have no idea how exactly things will pan out. And obviously, if China goes to war with Taiwan, China and Taiwan will both suffer. But it's kind of hard to quantify exactly, how much the U.S. and Canada will get damaged by, right? So I acknowledge there, and you can't have it both ways, I think, because China has this amazing logistics system that supported the ramp from Shanghai, which has been amazing, right? Like, just looking at the last couple of years, we all have to acknowledge that. But Elon Musk's stuff definitely not shying away from taking risks if he thinks that, that is the way to go. But I think we're getting a little bit away. The conversation really was from, so FSD, would the other manufacturers catch up and then then undercut the price so that the margin is not as high as I projected. Is that a fair characterization of that criticism?
I actually think that the FSD software is going to be a lot more valuable than you're putting into the numbers. And I was thinking about this, and here's why. So if you put, let's say $100 or $200 for FSD, yeah, okay, that's what an average person might pay for their car and be comfortable. But what would a business pay for FSD on a transport truck, right? So on like a subscription model, because you pay a trucker, or like, for example, I don't know if you guys know what shunting is. So like when you have these distribution centers, because I've worked in a lot of distribution centers, they have like a truck driver outside that is just like pulling trailers from doors and putting them in other doors and moving trailers around on the property, right? That type of automation could, having 2 or 3 of those trucks just moving stuff around, compared to the salary of and benefits and all of the other things of a driver, like full self-driving, I think could sell in the thousands per month if it's put into like a business application for like truck drivers and stuff like that.
The
imagine the efficiencies of being able to run a truck 24/7.
Yeah, the thing with the software network effect is obviously people realize, the margin is almost kind of like 100%, which obviously would attract competitors, right? So it's just a matter of how long can Tesla stay off the competitors. Like competitors look at like, well, they're gonna have the break-even point where it's like, if I invest and then I compete with Tesla on price, and this is how much revenue can get, this is my return, versus leasing the technology from Tesla, right? So if a Tesla can hit that sweet spot, then there's no reason for other competitors to invest in technology, because all you do is you put a whole bunch of money in it, and then you just end up competing with the market leader on price, and they already have like, no variable cost. So I don't think, yeah, so price might come down, but demand might go up. So I'm not sure, whether my model is too conservative or too aggressive. But if price come down, demand would go up. That's just how I think about it. Why would Ford and GM invest billions of dollars in it, knowing that in 5 years they just be where Tesla is now? Like, why would they want to do that?
There's so many companies that are looking at self-driving, and I've actually heard you guys seem to be thinking that Tesla's the leader in this, and maybe you're right. I don't know. It's not an area I have a lot of insight into, but I know that I've heard some analysts say that they think Waymo and Google have some advantages over Tesla. So my guess is that this doesn't shake out those a winner shake all.
The hardware is a lot more expensive though.
Is it? And that might be the disadvantage, but like, I think like it's probably not going to be a winner take all situation. My guess is that everyone probably gets a share. I know Ford is trying to has some kind of deal with Walmart, and I think they're hoping to have self-driving transport trucks for Walmart. Like, yeah, there's going to be, I think, a lot of competition in this space. Because if I could just make one final bear point, and I'm going to shut up for the rest of this because Tom has done hardly any talking, and I think he's got a lot to say and probably knows this stuff better than I do, if I'm being honest. But right now, Tesla is priced as if it's holds 20% of the auto space or something in that range, right? When they own like 2% of the auto space. So we're talking about the potential upside. I think you said 20% per year is what you see the upside is, is that correct?
Yeah, at $1,000 share price. Yeah. So right now you're buying with the margin of safety around 20% as well.
Yeah. So, but my potential downside is when they are priced at 20% and they only hold 2%. Well, I see if they fail to capture that, I see a huge downside, way bigger than the potential upside over the short term. So that's my big concern. That's why I won't personally invest any money in. But I'll let you guys respond and make your arguments.
I'll just do a short one. If FSD doesn't pan out, I think the stock price will not hold up, right? So the price is basically people pricing FSD in. And I think there's high probability it will succeed. And I'll let Tom take the.
Yeah, I think that's what it all comes down to is FSD, because like I'm looking here right now, it says there's around 5.6 million semi-trailers in the US on the road. That's not even Canada. So like, let's say if you have 5 million trucks, what's 10%, like, you know, even a 5 or 10% of that, if Tesla captures and is able to sell that full self-driving on an industrial level, to where like you have businesses saying, okay, do I want to pay a truck driver $100K a year who can only legally drive 10 hours a day, or do I want to pay Tesla, let's say $5,000 a month per vehicle, right? And have that vehicle running 24 hours. So like that could drive, just because the data and the technology on some of these like more business type stuff. Even like, I think he was talking about like robots in the conference call or something like that. And, you know, a lot of this technology that Tesla's developed for its own manufacturing processes can be used in other aspects, and they can, you know, be so many different things that they can do. And like a lot of businesses, like I'm not currently involved, like I don't own any Tesla shares. I have no plans to buy, but like there's so many small things, Nate, that are going to drive growth and that are there as a cushion in case, you know, like you said, they don't get 20% market share, right? But you have all of these other things that aren't being priced in, like full self-drive, the growth of the solar business, the growth of the battery business. All of these things, I think, are going to be Tesla's safety net if they can't get 20% of the auto industry sales long term, right? And these other revenue sources are going to slowly grow and compound and become bigger and bigger and bigger, so that even if we don't hit those production numbers, it's going to drive gross margins like through the roof, because reoccurring revenue, and when they can resell that data and that software, is where you actually get the higher multiples. Like if you look at, for example, Apple historically was always trading at a pretty low PE, right? And then what really caused Apple to have multiple expansion like that? It was the growth in their services business, the reoccurring revenue, because a business is priced on, okay, how much revenue, how much profits is it going to have in the future, not how much profits is it going to have today, right? And the growth of that reoccurring revenue and the compounding effect, and the way that they can put that into all of these other projects to fuel further growth, I think that they're making all the right moves, and the other automakers never did anything like this. Like,
all right,
if you
Tom,
look at the biggest companies in the world, like, yeah.
You mentioned that you want to take a look at maybe discuss robotaxi. I thought like that was something that you're interested in.
Yeah, like
because that's similar to what the transport
so
thing you were. So I have like a slide. Maybe I can just show, and just people can, you know, you can critique it. So robotaxi, I see that, you know, as part of like, you know, you have more robotaxis, obviously you have less FSD sales because people will be taking the robotaxi instead, right? So these are kind of mutually exclusive. But let's just look at some of those numbers. Now, Tesla obviously have to invest some capital to build their own fleet, right? Because they can't sell the cars. They have to kind of operate those cars. They can obviously finance those. But the cost, you know, this is, you know, Reddit as an ARK Invest. But just think about the excluding FSD depreciation costs, which I don't know how much that would be, but just the operating costs of electric vehicles, we're looking at about, you know, about 10 cents to 20 cents per mile. All right. And if the cars are used continuously, right? And currently fares in New York City is about $2 per mile. That's not counting the starting charge, right? Now, New York City is obviously expensive, but, you know, we're talking a wide gap. Now, currently, I think Uber would charge, you know, like around half that, but say Tesla charges, you know, 50 cents per mile. So that's a 4x drop in the price of the current taxi fares, okay? And that allows people to avoid ride sharing, right? Who really likes ride sharing? You want to, you know, own the car to yourself, do whatever you want, you know, karaoke on the car, go ahead, right? So that's talking about margin of 30 cents per mile. I'm just looking at 50,000 miles per car, which is low for taxis, that's for sure. And the $3 million fleet, Uber alone has, you know, 3.8 million worldwide. That's 45 billion annual income. Okay, so it's just back of the napkin math. But, you know, thoughts on the robotaxi?
Yeah, I think like if you think about the costs of ride sharing, like I have a few friends that even under the current Uber model, it's cheaper for them to Uber to and from work than it is for them to own a car, right? And as costs go down, especially if you don't have like the labor costs involved as a driver sitting in the car, a lot of people are probably going to switch over and say, okay, why do I need to pay insurance, maintenance, all of these things, and own a car when I can just get around a lot cheaper in these robo taxis? And I think that it all comes down to the data, right? So I know the Hertz deal, I think is going to be a catalyst, because it's my understanding that Hertz is looking to rent these out to Uber drivers, right? So we have currently in Toronto, there's a company, I think it's called Atuzo or whatever, where they've actually also bought a fleet of Teslas and they rent them to Uber drivers. So if you want to drive for Uber right now and you don't have like a good enough car, you can go and get, I think it's Atuzu or whatever. You can go get a car and they'll charge you, I think, $9 an hour to take it out and go and drive for Uber. I think that the data collected from these, in terms of like just the pure data that all of these cars are collecting, how are they going to utilize this data in the future, right? Through robo taxis. For example, one thing that I noticed is I think they were talking about the lumbar support. Elon Musk had commented it on Twitter. Someone complained about the lumbar support being taken out in the newer models or whatever, and Elon tweeted back to him, I think it was like, from our data on the cars, like 99% of people don't use that function. Right? So just being able to know consumer behavior on what are the parts of the car that people use more, what are the features and benefits that we're offering that aren't actually useful, right? Because if you go and buy a Ford or any car, there's like all of these, oh, it has this and it has that and it has that, but how many of us actually use those things? Which features are the companies investing in that are useless?
Yeah, well, they may drive a purchasing decision though. So like people are not exactly rational when they buy cars. So we'll have to admit that. But obviously Tesla, have better data. That's for sure. Yeah.
Do you guys know what one of the number one factors in buying a car is?
What?
The number of cup holders is one of the main drivers of sales of cars.
Really?
So why is it the Toyota Sienna not the best selling car, worldwide? Yeah, so minivans is kind of a weird story. Like just like, well, they're so functional, so useful. Why don't people buy it? They'd rather buy more expensive SUVs instead. That includes my wife, right? Like
because a lot of cars has to do with the narratives that go with them. With the narratives of masculinity.
Yeah,
why do guys who live in the middle of the city have a pickup truck? Because they think it makes them look more like a man to drive it.
Yeah.
And I actually think that's part of what's driving Tesla sales, is the cars do look attractive, right?
Yeah, well, that's that brand is malleable, and then the traditional, which is an interesting point, which is the traditional car makers know this, and they do advertisements with parties, sexy women, right? Like they know that this drives the buying decision, where Tesla refused to do that, right? Elon Musk doesn't advertise, so it's just all through the brand image, word of mouth advertising alone. So you can critique that approach, but one thing that forced Tesla to do is save billions in advertising costs, and they can reinvest into improving safety. Now, safety is not the major reason why people buy cars, that's for sure, but maybe that's the biggest reason why businesses might buy cars for their operators.
When I bought my last car, I think for me, like I drive a 2017 Toyota Camry hybrid, right? And I was thinking of buying an electric car, and I looked into them. And at the time, there wasn't anything that had any decent range, right? I drive a lot. I can't have a car with a 300-kilometer range. Like that's not livable for me. I need the range. And then for Toyota, it has a reputation of being very reliable. I would never buy an American car because they break down so easily. And, European cars have more expensive parts and repairs.
Yeah,
and I've seen some Toyotas GTI, with with 1 million miles, with 1 million kilometers on them. So it's like when you see like a Ford or like the most US cars, like once you get up to like 200, 250, 300,000 kilometers, the car is going to start to go, right? With a Camry, it's like you have 500, 600, 700. Like I've seen Camrys with crazy mileage on them and are still running. You know, so it's like, what is Tesla's reputation going to be? It's going to be around looking good. It's going to be around the fast, like the 0 to 60, how fast they can accelerate. Because like you said, that adds to the story. Everybody likes to be able to, you know, hit that gas and have everyone be pushed into the back of their seats, showing off to their friends and stuff like that. So I think Tesla does have a lot of really good branding built into it as well. So
not just cup holders, right? Reliability and longevity. And certainly we'll need a few more years of Tesla story to kind of really know how how reliable, you know, like after 10, 15 years, right? Because we just don't have that data. But looking at the used car market, you can see the prices hold up really, really well. And that's going to attract some buyers as well.
Like I personally, I don't think Tesla's going to go up a lot in the near future. I think that we're probably going to head into like some consolidation period because, you know, people like Nate, they want to see more evidence that Elon can execute. And until we have that evidence, I think a lot of the upside is baked in, and, you know, we're going to probably head into some sort of consolidation. And then it's going to go higher. Like, I think that all of these, even your bull case, when looking at the long term, 5, 10, 15 years, I think that's slow. I think over the long term, they are going to exceed everybody's expectations by far. And in the short term, it's going to be, people are going to be watching to say, hey, can they execute? And we want more evidence of execution before we can justify pricing in all of those other side bets that Tesla's making.
Yeah, well, we'll see, right? And the interesting point you're making, just looking at analyst consensus price targets, we're looking at somewhere between 950 and 1,000, which, you know, at current price level will still have some upside, but maybe they update that. So to me, it sounds like an opportunity. I agree with you guys. Obviously, I think we would have to see further evidence from Tesla executing, and also, you know, how much can Ford and GM and Volkswagen catch up to justify the evaluation. And once people see the evidence, I think we just have more certainty, right? So it'll be one way or the other. It'll just go up, or, you know, flat, or go down because they don't think Tesla will, you know, have that advantage. So that sounds good. But, you know, I think we're getting to the close here, and we want to you know, like have a preview of the next episode. Have we decided yet? You know, is Palantir on the schedule? And with you know, just to clarify, right? So today's three of us actually, you have a 4 investor, Tesla investor, which is me, and a non-investor, but pretty bullish in Tesla, in Tom. And so, you know, if we do Palantir next, then we'll have the bull make the bull case, and then we can start there.
Yeah.
Does that sound good?
Yeah, I can make the bull case for Palantir.
Awesome.
What about you? I can do the bear case.
Yeah.
I can just be the perma bear.
So like I think, you know, and this brings it perfectly into Tesla too, in terms of Palantir. Palantir's biggest competitor is their customer, right? So for example, like Tesla has all of this data, right? From full self-driving tests, all this data from all these million miles driven, and how Tesla interprets the data from all of their miles driven, from their insurance, from their manufacturing processes, all of these different data points. How do they take that data and actually use it to make decisions in the business that are going to drive returns higher in the future, right? So a company like Palantir would come to Tesla, and Tesla's going to say, well, we have our own engineers, and they're creating our own data, right, in-house. So convincing businesses that they need this service, right, and that it would be more effective to do it in-house is like Palantir's biggest hurdle, in my opinion.
What's your let's just give something, for us to think about. What's your anticipated rate of return on Palantir? Because you mentioned that you don't invest in Tesla because Palantir is a bigger opportunity.
I'm sorry, guys. I gotta go. I can't do this any longer. I'll talk to you guys later. Thanks.
Yeah. Okay. I'm gonna give you some rough numbers, okay, in revenue right now coming in annually, okay? They've guided at 30%. They've guided at 30%. So if they continue to grow revenue at 30%, I'm under the belief it's going to be a lot higher than that. I think we're going to see accelerated revenue growth. But anyways, to keep things simple, assume they do 30% revenue growth per year, then that gives them in 5 years, they have about 6.6 billion in revenue, right? Now times that by, right now they have a 30% free cash flow margin. So if that, we're going to just assume, just to keep things simple, that they can maintain that 30% free cash flow margin. Looking at companies like Google, we'd say, okay, price to free cash flow would probably be maybe like 35.
Yeah,
would be a fair multiple. So if they have, so if we take the 6.6 billion with a 30% free cash flow margin, gives us 2 billion with, let's say a 35 free cash flow multiple would bring the market cap to about 70 billion in 5 years.
In 5 years. So we're talking about currently it's at 25 billion, right? So we're talking about, well, actually, it's not that far from my bull case on Tesla, right? Because we're looking at doubling and then a bit. So I think roughly around 20% internal rate of return.
That's my bear case, though.
Oh, okay. All right. Okay. So the bear case is 20% compound return, and I think that sounds pretty good. All right. So let's wrap this up, and it's great talking to you guys, and I'll see you hopefully in a week.
Okay, perfect.
All right. Bye.
Bye.